Venture capital investors are betting the house that a new crop of startups can shake up the slow, and expensive, process of buying and selling property in Europe. That comes just months after American property portal Zillow scrapped its own algorithm-driven house flipping service after chalking up losses of close to $880 million. Italian startup Cassava just raised $100 million equity, and $300 million of debt, to expand its own instant home buying, or iBuying, service to France and grow its operations in Italy, Spain, and Portugal. The Milan-based company has already bought and sold 200 homes with a collective $1 billion price tag since launching in 2017. We got the question around Zillow, but investors who have a strong thesis on residential markets understood that this was a very Zillow-specific problem, says Giorgio. Zillow let go 2,000 staff from its offers division after labor and supply shortages left it with a $304 million loss in the third quarter of 2021 and a backlog of 7,000 unsold homes. Tinexai says that while Zillow scrapped its home buying division after just 2 years, its American rivals, Opendoor, OfferPad, and Redfin, remain active, and Europe's property market was very different from the United States. Tinexai says that he focused on buying apartments in a handful of major European cities like Rome, Milan, and Madrid, where there is an information asymmetry on listings prices because of patchy data, and lower refurbishment costs, as opposed to the typical suburban American home targeted by Zillow. In a nutshell, Europe has a structural advantage versus the U.S., says Tinexai. Cassava claims to be able to make an offer on a property within 2 days, and complete a sale in under a month, while the average Italian home takes 20 weeks to sell, according to data from European property listings site Idealista. But sellers opting for Cassava will need to accept a discount on the valuation in order to book a quick sale. The latest investment into Cassava, which has now raised $350 million, was led by Axor, the investment arm of the billionaire Agnelli family, along with earlier investors Green Oaks Capital Partners and Picus Capital. The backing of an Italian deal-making dynasty comes as many venture capital investors have pulled back from tech investments, particularly in capital-intensive sectors like property, and is a bet on European property as the continent's economy is buffeted by a mounting energy crisis and inflation. They are a perfect fit because they are a long-term investor, says Tinexai, who was also backed by the family's venture arm Axor Seeds.